So I've just been watching the budget for the last hour or so you don't have to. There were loads of rumours in the build up to this budget about what may and may not change. Lots of talk about levelling up. I presume Rishi loves Pokemon or something. But I've sat through it and I want to go through the main points, main changes, and try and summarise everything that I can for you and how it might affect you. Let's do it. Welcome back to the channel. This is That Finance Show with me, Tom Morgan. I'm a financial advisor and planner here in the UK, and I do a video each week, usually about investing, personal finance, getting better with money on a range of different topics. Now, I'm trying to put this video together really quickly today, soon after the budget. Rishi has just stopped speaking, so forgive, it might not be quite the usual production level we're used to, but what I wanted to try and do was go through the main points, what has and hasn't changed. Listen, I'm not trying to be political here. I'm not trying to offer whether this is a good or a bad budget. I'm just trying to share with you the facts, what I pulled out of it, so that you know how it may or may not affect you. It was a really important budget, I think, £280 billion pledged so far for the COVID-19 response. You know, that's the biggest sort of spend since wartime. Economy shrunk by 10%. So it's a really interesting budget to try and get right. But the positive is the vaccine program seems to be working, so they're quite keen to now suggest that the recovery of the economy might now be happening much quicker than previously predicted, and we might be back to pre-COVID levels as early as the middle part of next year. Let's get into the nitty-gritty. I want to just try and cover the important bits, the bits that I pulled out. Impossible to cover everything in detail, otherwise I'll be talking for an hour and nobody wants that. So I'm just going to pick out, as I say, what I think's important. So let's get right into it. So the first thing that's worth announcing is, no surprise, in the furlough scheme has been extended now until the end of September. I think we were all expecting that. Terms are exactly the same, no change in those, so the furlough scheme as it was is simply being extended to the end of September, so that's 80% of salaries if you're employed. However, one small tweak to that, the government are going to ask for employers to put their hands in their pocket a little bit. From July they want 10%, August and September 20%. So companies are going to be asked to try and help support the government in maintaining that scheme, but if you're employed, if you've been furloughed, good news is that's been extended to September. Self-employed not forgotten either. There are grants continuing in place for those. I think the announcement was if turnover has been affected by more than 30%, you'd be eligible for an 80% grant. If you were less affected, then the grant available, I think, was 30%. I have to double check some of those figures, and get the detail on those. But there is still some extended support for you self-employed people too. On to universal credit. No surprise there again. Rumours were that that was going to be extended. So the uplift that has previously been in place of £20 a week has been extended for another 6 months. And also the national living wage will be going up from April to £8.91. Now, on to businesses. One of the interesting things that they mentioned was a grant for businesses taking on new apprentices. There's a lot of focus in this budget they talk about an investment-led recovery. They really want businesses to be at the forefront of the recovery, creating good, quality, high-paying jobs. And one of their attempts to address that is to encourage businesses to take on new apprentices. So I believe the announcement was £3,000 for each new apprentice hire. No more detail particularly I don't think was given on that, but there is some appetite to encourage businesses to take on apprentices, and there's some money available to businesses for that. That was also alongside a restart grant that was announced for businesses from April, I believe it was. Now, it depends what kind of business you are. He talked about amounts of 6,000 and 18,000. I believe the 18,000 was for the hospitality industry, which is likely to continue to be affected for much longer, and when they're able to reopen and start trading again will be further delayed. So there are higher amounts of grants available for the hospitality sector. As I say, I think the figure was 18,000. So have a look into that. There are restart grants for you small business owners to try and help still paper over this period that you can't trade. Another thing that was announced was a new recovery loan scheme. We've seen all these bounce back loans and different levels of support for businesses, so it looks like we're continuing in that vein with this recovery loan scheme. He talked about loans being available between £25,000 and 10 million, so a pretty big figure, and the government is going to offer a guarantee to lenders of 80% of that. So again, that is more money trying to encourage businesses to have access to these loans to try and keep them going and come out of this stronger. One thing that I know a lot of small business owners were quite keen to learn more about was business rates and whether the reliefs that have been in place with the COVID stimulus will remain, and Rishi did confirm they're going to continue with 100% business rate relief until the end of June. But even then, he's going to try and taper the return to normal business rates. So I think it was 2/3 discounted, up to 2/3 discounted rates for the remaining 9 months. So continuing on 100% rate holiday for the next few months until the end of June, and then even then it doesn't go back to full rates. You're still going to be offered an up to 2/3 discount for the remaining 9 months before tapering back to the normal levels. The 5% VAT rate, so VAT was cut if you remember, that is going to continue as well. So 5% VAT has been extended for 6 months until the 30th of September. And even then, that's not going straight back to 20%. So in a similar way to business rates, what Rishi announced was that we're going to have an interim rate of VAT of 12.5% for another 6 months to sort of phase the VAT rates back in rather than jumping right from 5% back to 20%. Now, a big one, again, that was pretty well rumoured was around stamp duty. So this is the tax on people buying houses, and there was a huge relief put in place to get rid of that for a lot of home buyers. And there was a lot of talk about whether that was going to be extended. We've still got lots of people trying to buy houses. That's taking awfully a long time, a lot longer than planned. And so it was rumoured to be that the government would continue that stamp duty holiday, and that has been confirmed. So the stamp duty holiday, so the nil rate band, you will pay no stamp duty on any purchase up to £500,000, and that's been extended until the 30th of June. And thereafter, interestingly, it's actually going to remain, the nil rate band will fall from 500,000 down to 250,000, but that is still double the normal rate of the nil rate band for stamp duty, and that's going to be until the end of September. And then from then, October onwards, it will be back to the normal stamp duty regime. So stamp duty holiday is continuing, and there's a little bit of a phased approach to come out of that as well, which we're seeing a bit of a theme with VAT and business rates, where there have been cuts. Looks like they're being extended on the whole, and sort of a transitionary process to get people back to normal. One of the other areas that Rishi was keen to address was people with small deposits. They really want to try and encourage, it would seem, people buying houses. They use this phrase, I forget what it is now. What's the phrase? Something about not having renters and having buyers. God, it was obviously catchy because I can't remember what it was. I did watch it. But essentially, they're encouraging lenders, banks, building societies to get back in the market of offering 95% mortgages. So you would only need a 5% deposit, and the way that they're doing that is offering guarantees to those lenders, so those loans will be government backed. And I think he mentioned Lloyds, NatWest, Barclays, a few names that were already on board, and as early as next month they will be available, so he says. He totted up some of these measures and the costs. I mean, it's another £65 billion in total measures in the cuts and the extended cuts that they're continuing with. So in total, he mentioned a few figures, but the one that stood out was it's something like £407 billion in total fiscal support over the last few years with their reaction to COVID-19, which is certainly a whacking grand old figure, and of course we'll need paying for somehow. So now let's take a look at some of the other areas that may address how we deal with this debt. Lots of rumours about what will happen with capital gains tax and so on in the build up to this. Corporation tax was a big one. People expected changes, and there are some changes. So let's take a look at what's happening in tax rates. The first thing Rishi confirmed is that there is going to be no increase in income tax, national insurance or VAT. But interestingly, the income tax is an interesting one. So ordinarily, what we've been seeing with the Conservative government is the bandings, the thresholds that deal with income tax have been increased in line with inflation each tax year. So there's going to be a little bit of a change to that. The thresholds are going to remain the same this year. They are then going to increase next year as previously planned. So we'll have a personal allowance from next year of 12,570. It's currently 12,500. And the higher rate tax band is going up to 50,270 from 50,000. Those are from next year, and then crucially, they're going to be frozen until 2026 rather than continuing to increase. So what that essentially means is that although there are no increases to income tax, and he made the statement that nobody's take-home pay will be less, and mathematically that's true, that's what he's saying. Of course, by not raising those bands in future years, it is a cut of sorts because it's no longer going to be linked to inflation. So we're going to see the same tax bandings from next year all the way through to 2026 with income tax. Inheritance tax and pensions he left well alone, which as a financial advisor, especially pensions, really was welcome news for me. And interestingly, capital gains tax, which was one thing I really thought might be on the chopping block to have a look at, is staying the same. Again, what he did suggest was that there's going to be no increase to the annual capital gains tax allowance, the 12,300 in profit that we're allowed to make before we pay tax. So again, a cut of sorts by no longer increasing that moving forward. But interestingly, capital gains tax rates, the percentage that we pay, no change to those. Now, corporation tax really was probably the one we all expected. This is the tax that businesses pay on profits. And what's going to happen is we currently pay 19%. They're raising that up to 25%, which is quite an increase, but that's not coming into play until 2023. So they're sort of giving businesses an advance warning. They still make the point, however, that they continue to make that even at 25%, it's still the lowest in the G7, comparative to the US, Canada, Italy, and so on. So that's April 2023 that change comes into play. So he's giving businesses advance warning. But interestingly, the bit that was probably more interesting for me, if you're a business with a profit of 50,000 or less, you're actually going to stay at the 19% rate. So essentially what they've introduced is a smaller company corporation tax rate, which means, and he quoted, 70% of companies will actually therefore remain unaffected. So he's really going after bigger businesses here with this tax increase. And even then, if you're a business that makes over 50,000 in profit, there's going to be a taper. So you're not going to pay the full 25%. It's only businesses that have profits of over 250,000 that's actually going to pay the 25%. So the point that Rishi is making, yes, corporation tax is going up, but it's actually only 10% of companies that are going to pay this full new rate of 25% come 2023. Now, there were loads of other measures mentioned there were big numbers thrown about investments into other sectors, which I'm not going to go into huge amounts of detail here. I wanted to put this video together on the things that do or don't affect most of us, average Joes on a day-to-day basis. But he talked about the UK Infrastructure Bank trying to lead this green revolution. There's going to be £12 billion infrastructure bank up in Leeds. And he talked about a new green savings product, which there were no further details given on, which will be interesting to see. These help to grow schemes. There were lots of announcements around, investing into different sectors. Again, coming back to that, what they want is this investment-led recovery, and that's what all those measures are trying to address. He talked about a super deduction, if you picked up on this, and again, this is more for companies. What he's trying to do here is there are a lot of companies that are sat on a lot of cash, and the government want businesses to use that cash to invest in innovation, making better products, services, investing in their people, their businesses, etc. So there was this super deduction tax that was, super deduction allowance that was being talked about, which essentially, if businesses use this money, they're going to get a reduction in their tax bill even more favourably than the current system. Again, won't go into huge levels of detail. That probably affects a very, very minority of people. There was a little section on visa reforms, which is interesting, trying to encourage highly skilled migrants. They're essentially going to try and make the process a lot easier and encourage more skilled people to come in. And again, this is all focused around this idea of an investment-led recovery. But perhaps the most important thing of all for the average Joe are two things. The increase in fuel duty that was planned has been scrapped. So don't worry, fuel isn't going to get any more expensive. I've got nowhere to go anyway, so my car is just sat there, so okay, great. But most importantly, of course, the increase on alcohol duties have been frozen, so it's not going to cost us any more to go and buy that nice bottle of Blue Nun, which we still love, and is probably the thing that has seen most of us through these lockdowns anyway. I hope that was useful as a bit of a summary. Now remember, the devil's in the detail with these things, so please check out all the in-depth detail. You'll find loads online over the next few days, summaries that are put together that are probably more comprehensive than this, but I've introduced there to you the main topics and the main changes. Remember, I do a video every single week on trying to get people making better decisions with their money. We talk about investments, tax, all sorts of different topics. It's quite a light-hearted approach. I even attempt to be funny from time to time, with mixed results, but yeah, please feel free to consider subscribing to the channel. Give the video a like if you found it useful. Drop me a comment in the box below. Was this a good budget, a bad budget? Does it affect you enormously or not? Any surprises? Anything you were expecting that wasn't in it? Let's get a conversation going. It'd be really good to talk to you. Remember, money doesn't buy you happiness, but a lack of it will make you miserable. I'll see you as normal on Friday and every week thereafter. Thanks for checking it out.